Hey, how's it going? Seth here. In this video, I just wanted to show you a quick framework that I use when I'm making offers. And there's actually a lot to be said about this. The whole idea of how we formulate what our offer prices should be based on what we think the property is worth, but not just what we think it's worth. It's about how confident we are in that number, and or is this a very competitive market where we're competing with other land investors for the same deals? And or is this a highly desirable property that can be used in a lot of different ways? Or is this a property with limited uses that the average person isn't even going to want? And basically just how quick and easy is it going to be to sell this thing at the price we think we can sell it at once we own it or once we get it under contract? Those things play a big role in determining whether we offer towards the maximum end of this range or the minimum end of the range. And as you can see right on the screen here, these are generally the offer percentages that I offer based on what that property is worth. So you'll notice if a property is worth $0 to $2,499 or, $2,500 or less, I don't make offers on those because those properties are so cheap that even if I paid like 10 to 15 to 20% of market value, there just isn't that much meat on the bone to make money. By the time I pay for my title search, any taxes, any transfer costs, if I use a title company, it could easily wipe out all my profit and I could be in the red. Or even if I did make some money, the juice just isn't worth the squeeze. So I just don't bother with those these days. When it's in that $2,500 to $10,000 range, the minimum amount I would offer would be about 10% of that market value, whatever that is. So for example, if I thought the market value was $10,000, at the very minimum, I'd be offering $1,000 for that. And at the most, I'd be offering $3,000 for that. And once we move up to the $10,000 to $20,000 range, well, then you'll see the minimum and maximum offer percentages go up. And when we get to $20,000 to $50,000, they go up again. $50,000 to $500,000, they go up again. And the reason these go up is because I think you'll generally find when you get to those higher value properties, these owners are not going to be nearly as ready to let these properties go for pennies on the dollar. A lot of them will still sell at a discount, but not like a 90% discount. So you just have to be ready to come to the table with more money for most of those properties. I'm not saying you can never find a $100,000 property for $10,000. I've seen that kind of thing happen more than once, but statistically speaking, you're going to have a harder and harder time getting more expensive deals for those ridiculously low prices. So that's why these offer ranges move up and up as the values go higher and higher. And you might be wondering, okay, Seth, so what would make me offer 40% of market value for a $100,000 property or 60%? What would make me go higher or lower? And again, it just has to do with the competitiveness of that market, how quickly properties are selling, how desirable that property is, and how confident I am in what I think that market value is. And there are a few other really big caveats to note as we're going through this thought process. So first of all, there have been many, many times when I will break these rules and I will offer more or less than what this range dictates. This is just a starting point, a reference guide. If I have nothing else to go by and I just want to quickly understand, okay, where should I be starting? This is what I go by. But say if I find a property that I know is just gold and this thing is going to sell in a matter of hours, then I'd probably be willing to offer over my maximum percentage based on the market value. Or if this property is landlocked or covered in wetlands or has some other major issue that affects its usability, one option is to just not make an offer at all because it'll be harder to sell. But if I think it's worth the risk, I can still make an offer, but that offer might even be below my minimum percentage based on whatever that property is worth. So just keep that in mind. There's always exceptions to these rules. And also, if you were going to use a funder to fund your deal, and that funder was just looking for, say, like a 15% return on their money, you could certainly offer over the max percentage in many of these cases. I'm kind of going at this with the assumption that most people are not using funders from the very outset, but I'm seeing more and more people rely on outside funders to fund their deals and they then split the profit in some fashion. And when you're working with somebody like that, and when the returns don't have to be so ridiculously high, like when you don't need a 100 or 200% ROI in your deal, maybe like a 20 to 30% ROI would do. You can achieve that by offering more, again, if you're pretty confident about what that market value actually is and that it's going to sell in a decent timeline. And also another big thing to consider is that if you're going to be doing improvements to this property in any way, like subdividing or getting entitlements for it or changing it in any way, shape, or form, whether that's just like cleaning up the brush or adding a driveway or a fence or anything like that, if you're going to do something to materially change this property and make it worth more, then that kind of thing can completely change what this kind of chart would look like. Because when you know you're going to make a property worth more than what it is today, you can offer even over the current market value, because what you're more concerned about is that future value and what that is going to be in the end. And also how much time and effort and money it's going to take you to get it to that future value, whatever that happens to be. So this chart is working with the assumption that you are not doing anything to the property. You're just flipping it, you're buying it as is and selling it as is. So if you are planning to do any kinds of improvements, just know there's a different set of rules that apply to that. And that's something we talk more about in the Land Elite Masterclass, because that's kind of above and beyond the scope of just what a normal land flipper does. It's a very, very different business model than what we're talking about here. And I should also mention the chart you're looking at here has undergone many different changes over the years that I have been a land investor, just to give you some comparison for reference. So when I first started flipping land back in 2009, the market was way, way different. I mean, everything was worth a lot less. The US economy and real estate market were in a terrible condition, and I could make just absurdly low offers to landowners and get a lot of acceptances. A lot of people were tripping over themselves to sell me their property at a huge discount. And this is a better picture of what my offer logic looked like back then. And I could get deals like this all day long, but fast forward 15 years and the market is a lot different. There's a lot more land investors out there now. Land values are way higher. The housing and construction markets are a lot hotter now than they were back then. And that's why these percentages have changed quite a bit. And you know what? This is probably going to change again in the future. So I would caution you to not look at this, or for that matter, anybody else's offer logic as the gospel truth, but just use it as a starting point. You have to use your own critical thinking based on the market and the property and your own level of confidence and what that property is worth. And I would even say create your own chart like this and feel free to tweak it and change it as time goes on. If you're seeing that certain offer percentages aren't working that well in certain markets, that could be a clue to you that maybe you need to adjust your numbers in some way. And again, a lot of this stuff can even vary on the market. So it's really hard to come up with a black and white set of numbers that's going to work everywhere. In fact, I can almost guarantee you this is not going to work everywhere. But at the time of this recording, this is the offer range that I see a lot of successful land investors using. If you do want to use these calculations, it's actually really easy. Just take out a calculator and use them yourself. But I also have this little calculator here that you can use if you want to. Just go ahead and click on Get Started. And by the way, you can use this on your desktop or your phone or whatever works for you. All you gotta do is start by putting in the market value of whatever you think your property's worth. So just for an example, we'll say $100,000 for this one. And then for the offer price here, we can go back here and say, okay, let's say this property is $100,000. What would we offer between the $50,000 to $500,000 range? So I like to be conservative. I'm gonna say $40,000 for this. For the closing costs, let's say for title insurance, title company, all that stuff, it's gonna cost us $1,000. Holding and improvement costs, well, if I'm not going to do anything to this property, maybe just pay some property taxes, I'm going to estimate maybe $500, something like that. And then closing costs to sell, I could put $1,000 in here again. And then I anticipate that this thing is going to sell for probably $100,000. I'm pretty confident in that, but I'll be conservative and say it's only going to sell for $80,000 or 80% of its market value. And then we can see over here what our deal is going to look like. We're going to get an 88.24% ROI, which is pretty solid. It's going to cost us $42,500 to acquire this thing, and once it's sold at $80,000, our net profit is $37,500. It's a pretty solid deal. And again, if we had sold that thing for 100%, we'd get even more money. Now, with an offer like this at the lower end of the offer range, if I'm working in a super competitive market with a highly desirable property and a seller who is actively getting offers from other land investors on a daily or weekly basis, then there's a fairly low chance I'm going to get this deal accepted, because this person has their pick of what offers to take and they know it's worth a lot and it's a hot market, all those things. So I would usually reserve this kind of offer for a market that is slow, a property where I'm not sure about the market value, or a property that has a range of imperfections. It's still a usable property and it'll probably sell at some point, but it's definitely not a cream of the crop type of property, just to offer some context there. So it's a pretty simple calculator. You can probably do this on your own if you have your own spreadsheet or calculator. But, you know, if you want something nifty and easy to use, go ahead and bookmark this, and I hope you find it helpful. So that's the overview. Thanks for watching. And again, don't hold fast to this. If you see stuff in your market or with the properties you're dealing with that tell you you need to work outside of these ranges, do what you need to do. I just wanted to give you the ranges that I work with so you have some point of reference to go by and you don't have to feel paralyzed with fear or uncertainty because you're not sure how to proceed. So thanks for watching, and I'll talk to you again soon.